All right, so before I jump into the lesson plan that I have today, I just want to go over the trades that I took today, go over why I entered, where I left, and we can just do a quick P&L run through. So I'm still growing the small account, and I took two trades today on the small account, both of them on SNGX, one that we were talking about a fair bit. So, let's see. I don't have my pen right now. We'll use these. So I entered my first trade right here. That's the micro pullback setup that I trade every single day. Reason being, MACD was open. SNGX is a continuation play. It was on my watch list. Float of 3.26 million, so a very low float. Relatively fresh news, right? Continuation play. Made a big move up. Now I strategically entered off the 9 EMA. This is something that I preach to you guys. When you see a stock that is above the 9 EMA, this gray line, 9 EMA, 9 exponential moving average. If you don't have it on your 1 minute chart, you need to put it on your chart. When we're above it, we're in a bullish trend. When we're below it, we are in a bearish trend. So to put simply here, my entry was as soon as this candle pumped up and broke over that pullback. Here's why. When we opened up, we tested the 9 EMA, but we never went below it. And even if we did go below it, let's just say, for argument's sake, that there was, for whatever reason, a wick right here. We still got bought back above it. And this is another reason why I tell you guys that you need to be paying attention specifically to how much time is left on your candle before it closes, right? Because a lot of the times a candle will open up with, the first 10 seconds doing some crazy shit that it's not going to close doing. So pay attention to the clock. If in the last 10 seconds, the last 15 seconds of the candle, it starts to reverse on you, it will likely close as a reversal. But if the first 10 to 15 seconds, it's kind of unpredictable, just, remain patient. Don't freak out. So I think I got my pen now. So I entered here as soon as this candle broke. We hit the 9 EMA, we respected it, volume started to ascend, open MACD, low float, continuation play, high conviction. I took half the size of the small account, which is now $5,442. So I bought with roughly $2,500 on this first play. Broke here, bought, rode up here, and I ended up selling in this candle somewhere in the middle. I don't know the exact fill. I could pull it up though. So on that, made 100 and I believe it was 40 some dollars. So like 143. And that was just in, 2.5 minutes. Perfect trade. Couldn't have asked for it to go better. So as I'm watching it, paying attention to the trend, I notice that we are hitting this level kind of consistently. So we come up, we drop down, curls back above the 9, starts to kind of choppy trend its way to the side here, but we wick here, we reject. We drop, we get bought back up. We push, we reject. We push, we reject. We get bought back up. Here's something that you will start to notice as a trader. If a stock wants to go up, it's going to go up. And if it wants to go down, it's going to go down. And all of the determining factors are present before it makes its decision. So you can tell that the sellers were adamant that this was not going to break this $4.30 mark. Every single time that the buyers tried to push it up, it would reject. And it was even rejecting on light volume, which is something that I noted. So if you see this, you see we have relatively strong bullish volume. We are hitting this line consistently. So when I noticed that we had hit it 1, 2, 3 times, I put it there and I said, okay, I have half of my buying power left in this cash account. If we come retest it again, I will punch an order and I will only hold it for one candle. Reason being is because it's still a flat top rejection. So even if we get above it, it's still very high risk. So I wasn't asking the world of the stock. So the second we drop here and get bought back up, I said, okay, I'm punching an order the very second that this next candle opens. It opens, it drops, gets pushed above the 9, boom, I'm in, and we rode the wave, made an extra what was it, like $40? Just made $40 on that play. I didn't even need to see this thing go all the way parabolic. I didn't expect it to. It actually did exactly what I was looking for. And another thing to note is like the MACD was relatively red as well. So I wasn't going to, intend on holding this thing to a break to $5. If anything, I thought we would break 450. We never even touched it. So those are the two trades I took. I'll mark them out just a little more clear here. And I am going to be getting into like a form of a lesson plan today because I know a lot of people are confused. So there's the trade, boom, entry, trade, 130 something on that, and then like 40 on that. And the only difference between this being 130 and 40 instead of 1300 and 400 is just relative share size. So when you can prove consistency, even if you're trading with small size, you can prove that you are consistent. You can prove that you have the emotional awareness. You can prove that you're going to follow your strategy, size up, and start making a shit ton of money. It's really that simple. So I have a little note up here. This is my three attributes that you need to have if you're going to be a successful trader long term. And the first thing that I want to tell you is long-term success will never come from shooting from the hip. This is the problem. A lot of you guys will come in, you'll make cheap, stupid money, but it's really not yours. You are shooting from the hip blindly. You see momentum, you jump on it, you FOMO in, and maybe you get lucky. But here's the thing. That's not going to be sustainable. If you want to have more green days than red days, it will not come from FOMO. It will not come from luck. It will only come from you being disciplined and following a strategy. That's it. And it's really that simple. So if you're going to approach the markets in a sense of, I want to quit my job, I want to drop out of school, I want this to be my full-time career, you have to have a strategy and the discipline to follow it. That's the number one reason why traders fail. It's FOMO, shooting from the hip, and luck. Do not fall into that. It's all probability. So I want you to see the setup forming. Ask yourself, is this a high likelihood that it goes higher? What indicators are present that are making you say yes? What is not present that's making you say no? It's really that simple. Do not FOMO. Do not look for luck. Approach it strategically. Number two, you have to be obsessed with numbers. You have to be obsessed with data. If you come in gambling like a blackjack player, you're going to get blackjack results. You need to have some way of tracking your metrics. Now, me being a successful full-time trader, I dive into my metrics every day. At the end of every week, I review my week. I write down, I have told you guys this before. This is my first journal from when I first started trading. And I write in it all the time. I just keep buying them. This is my very first one. But when you fill it up, get another one. At the end of every single, whenever it ends. Like, for example, I ended my trading day at like 9:40 a.m. I hop in, entry, what did I trade today? Why did I trade it? How did I feel while I was trading it? You guys have to stay sharp. So track your metrics. TraderView, that's a software you can get, $30 a month, I think, but there's also a free version. So you can upload your trades directly from your brokerage. Webull, it's super easy. Pump it into your TraderView. It'll tell you what price stocks you do the best on, what time of day you do the best in, what volume works best for you. So you can dial this into a very small bullseye, and instead of just chucking darts at the wall, you're actually looking for something specific. For me, on this account, I just dove in last night. I'm doing best on stocks priced 2 to 5. Everything else I'm not doing well on. All of my losing trades are happening either below $2 a share or above $5 a share. So why do you think I traded SNGX today? It's right in the sweet spot. If I had traded something that wasn't in that little window, maybe I would have been red today. And I only knew that because of journaling and tracking my metrics. Okay, so do that. It's worth it. It'll pay you back in spades. And the third thing, this is very simple, is you just need the emotional intelligence and awareness to recognize when market conditions are not in your favor and when you are compromised, because you will become compromised. It's so easy to revenge trade. You enter a trade, high probability setup, but for whatever reason, because no one's 100% right in the markets, you lose. And you still have 50% of your buying power. You go, okay, well, I'm down $60 and all of a sudden something pops up on decent volume and you're a little bit late, but you're like, you know what, fuck it, I'm gonna revenge trade. You buy, it jackknifes down, now you're down $120. Now you're down double what you would have been. You were better off never taking that trade. So you need to have the emotional intelligence to recognize, okay, I'm compromised. I am mentally compromised. My heart's racing. I'm down a bunch of money. I'm nervous, and I'm just going to take my foot off the gas. I'm just going to wait. The next setup that I see that I want to trade, I'm just going to watch it. I'm going to mentally know, okay, this is where I would trade this, and then I'm going to watch it. And if it goes without you, great. Now you have some practice at not FOMOing. See how this works? It's a process, and you have to follow the process. So, indicators, let's just jump into indicators really quick. I know a few people were confused. What indicators do I use? I use the 9 EMA, the 20 EMA, and the VWAP, volume weighted average price. I trade on the 1-minute chart. So how do I use these indicators? And the MACD. I use the MACD as well. So how do I use each one of these indicators to give myself an advantage, an edge in the market? It's very, very simple. So turn these indicators on. Step one, just turn these indicators on. I see people ask me, Swords, where is the 9 EMA currently at on SMGX? I don't know, bro. I'm probably not even looking at that stock. I'll go look for you, but you need to pull it up on your chart and put the fucking indicator on. That way you can just look, right? You can gain some independence. My goal is not to have you in my Discord paying the month membership for the rest of your life for alerts, right? I mean, if you want to, that's cool, but you need to gain some independence. Gain some independence as a trader so that you're not relying on somebody else to make you money. You see what I'm saying? That's like the whole point. So turn these indicators on. Step one. The 9 EMA, this gray line. The way I use this is I only will take a trade if we are above it. Now, this is for you, okay? I will take some trades below the 9. Specifically, VWAP breakout setups, and that is mostly because I have a lot of experience and I have a higher risk tolerance than you. I've seen setups work below. You have probably not yet. So if you want to give yourself the highest probability trades, there's a book called Quit by Annie Duke, who was a professional poker player. And for the first year or two of her poker career, she only played a specific set of hands that were dealt to her. Everything else she would fold on, even if there was a chance that she could win. Think about it like this. You're a banker, and a homeless man comes in and says, I need a loan of $30,000 and I have a business idea. There's a chance that that homeless man can make you a bunch of money on that loan. But should you trust him? Should you do it? No. So only trade something that you have a history of success with as a beginner. That's very important. If somebody that you've done business with in the past then walks into the bank, he's made you a bunch of money back on your loans, and he says, I have a new startup idea, I need $30,000. You're going to say, fuck, here you go. Here's 35, here's 40,000. Go have fun. Go start this business. That's the same thing with trading. You see a high probability setup that's worked in the past, you size up and you punch. But just because something has the potential to make you money doesn't mean that it's a good idea. So you're only going to trade a stock above the 9 EMA on the 1-minute chart. That's it. If it's not above the 9 EMA's 1-minute chart, what are you doing? Don't trade that. Oftentimes, we'll see the 9 EMA as a testing point for these stocks. They'll come down, they'll test right here, it bases out, and it pushes higher. It pulls back, it breaks, you cut. You don't hold. Honestly, this candle, I cut in that candle. I remember this now. Reason being was because I was holding it when it was just a little doji like this, okay? And then in the last 15 seconds, I'm watching the clock. In the last 15 seconds, it starts shooting down. I'm like, okay, this thing is clearly going to go down. Control B, out on the bid just like that. Locked up my win. I avoided this entire drawdown by doing that. Okay? So we see it as a testing point. If you cut here and watch it go back down like I did, and you see, oh, look at this, we respect the 20 EMA now. That's a good sign. Oftentimes, if we break the 9, test the 20, break the 20, we're going to VWAP. And if we hold VWAP, we're going to do this for a little while, and then maybe we come back up. But if we don't, we're doing this. Okay? So it's a 3-tiered step process. Holds the 9, good. Breaks the 9, bad. Holds the 20, okay, good, we can still watch it. Breaks the 20, probably not worth watching. So we hold it, wick up, get pushed back up. I'm watching it in this zone here. I'm like, okay. I did not buy this. At one point, it was a full body green candle all the way up here. Doji starts trending sideways, breaks the 9 again, choppy. See how it got choppy there? MACD was negative. I was not taking a trade. I see we push here, fail. I mark the line. I said, okay, here we go. We're going to push back up. If I see this thing, you can see it turn green for just a split second, but it's flat top breakout. So I said, okay, we're going to test this. I punched the order, boom, punched the order, made some money. So that's how you use the 9 EMA. It's a support tester and a place to potentially enter off of if we hold it bullishly, okay? It's also a stop loss point. So it can be a point for entries, stop losses, and tests of strength and weakness. Very, very good indicator. You could honestly just have that on, but don't. Just give yourself the full context. The 20 EMA is the same thing, but it's the second tier. So if we break the 9, we test the 20 successfully, you can still watch the stock. If we break the 9, break the 20, move on. Just move on. The VWAP is your equilibrium. Very strong level of support and resistance. Oftentimes when we hit it, we hold. Now, ignore this. This is market open manipulation. That's all algorithms. None of that is clean price action. Do not hold a position in open if you can avoid it. This is what we want. This is beautiful. This is the best price action. So, oftentimes, I'll just give you this little tip, but don't force these plays. We break this, we break this, we break this. So now we're below VWAP. Most bearish that it can get. But let's say we break and we kind of hold. Instead of breaking and dropping, we kind of hold sideways. When we push back to VWAP, oftentimes it gets a lot of volume. It gets a lot of eyes on it, and then it pushes back up higher. So it's called a VWAP breakout. So if you see something break the VWAP, just watch where it goes after. If we stay magnetized and we're trending sideways like this, and we push through, we will likely do that. Okay? That's how I use those indicators. It's that simple. MACD, only take a trade if it's green and open. If it's like this, don't take a trade. If it's like this, obviously don't take a trade. Just another high conviction thing as a beginner, because you need to gain experience, and I want you putting yourself in high probability setups. I honestly don't know how many more times I can tell you this. I've gone over these indicators a million times. So if you have questions, just comment on the video. You're watching it right now, just comment and I'll answer. So that's how to use those indicators. That is my recap. We can pull over the Webull window here. $176.64 on the day. In just 5 minutes. Like, whatever. We're going to keep growing. And I want to see this count at 10K relatively soon. I'm going to. Good luck. Keep trading. Stick with it. Be patient. Track your metrics. Gain some emotional intelligence and awareness. Read some books. Have some quiet time with yourself. Just think. Stick with it. You're all doing good. Comment questions, and I'll catch you guys later.